On Friday, Palantir comes crashing lower, down more than 7% in the session. Stocks have a 70% chance of dropping once this one thing occurs. Now, Friday on face value may not look that bad, where you saw the Dow was up, the S&P was up, even the Russell 2000 was up. The only indice in the red was actually the NASDAQ, down 63.54%. Then when we come over and look at advancing issues versus declining, we have 59% of issues advancing on Friday. So again, it still looks like everything was humming along just fine. Even if we come over and look at how the sectors performed, on Friday, we only had 4 sectors in the red: consumer cyclicals, communication services, consumer defensives, and technology. Now, technology was one that was quite different, because if we look at the 1 week performance real quick, notice technology was the second best performing sector out there. The one leader out there for the week was healthcare. And as we come over and look at the fear and greed index this week, you can see we have a reading of 54. We are still over into neutral territory. However, at Thursday's close, we closed at 50. On Friday, the fear and greed index was even able to move closer towards that greedy territory. Then as we come over and look at the most recent investor sentiment survey, we had a reading of 42.9, moving up slightly from the prior week. The last week's prior bullish reading was 41.7. If you look at the bearishness, they stayed exactly the same. So essentially, some of the people in the neutral category said, you know what, time to go all in. The market never goes down. However, before we look at some of these charts real quick, keep in mind, a lot of the big banks out there are calling for the S&P 500 to hit 7,000 by the end of the year. Now we see Goldman's boss, David Solomon, warns of a stock market drawdown. People won't feel good. And we've been screaming about this quite often on this channel. But as we come back over real quick, we look at Palantir. Palantir on Friday had that nasty candle. But what's even worse about this is Palantir ended up producing a slightly lower high before we got the move on the way down. And look at the MACD indicator up here as we try to go up and re-challenge this prior all-time high. Notice how much lower the MACD indicator was. Then even if we come over and look at Tesla, we went ahead and pulled a Fibonacci during the live stream from the swing point here all the way up to the high once we had that bearish engulfing candle. One of the areas I was telling traders to watch out for was right here, right around the 38% retracement. See, on Friday, we dipped down there, and then we were able to reject off that, basically closing in the middle of the range. But then as we look a little bit lower, look at the MACD indicator. What do we have? We have a slight bearish cross of the MACD indicator. You might say, Mike, that's only 2 stocks out there, because when I come over and look at Nvidia was still able to make another new all-time high this week. Now, Friday, technology was just barely able to get over in the red. If we come over and look at the XLK real quick, notice on Friday, we have a wick on the top, a little bit of a wick on the bottom, and the wick on the bottom was enough and fill the gap that was left behind from Thursday. So what was causing the XLK to go down? Because on the 30-minute chart, a little bit after I got off the live stream, we saw XLK come on the move back down. We could correlate this over here with the QQQs real quick. Also, the Qs dumping down around that same very time. Well, if we come over and look at Nvidia, we saw Nvidia also rolling over here just a bit. Nvidia was down $1.27. But a lot of this had to do with Palantir. Palantir absolutely getting destroyed all day long. We look at AMD, a nasty bearish engulfing candle, also coming down low enough to go ahead and fill the gap from Thursday. However, this is not what I'm talking about with the 70% stat that I'm going to share with you guys later, that once this occurs, stocks tend to go a little bit lower. But something that we do have to be mindful of is the fact that we are still within a government shutdown. Now, right now, it may seem like the market doesn't care, yada, yada, yada. However, the government shutdown affects us in a few ways. Thursday, we had no jobs data. On Friday, we had no jobs data, but then we look at the calendar for this Thursday. Notice we're going to get the weekly unemployment claims tentatively. We don't know that to be fact yet. Then on Friday, they have now moved the non-farm employment numbers to this Friday. Now, let me know in the comment section down below. Do you guys think the jobs numbers, whenever we get them, are actually going to be good, or do you think they're actually going to be bad? And we can see right here, lawmakers have left Washington with no end to the government shutdown in sight. Now, a lot of people thought we would not shut down. There's no way the government's going to shut down. They'll work out a last minute deal. But I got to warn you guys, the longer this goes on, the more there's a potential for some type of pullback, especially with the market being so stretched the way it is. Then we see articles like this. Think AI is a bubble? Yep, we've been talking about that for quite some time. But what I don't like about this article is if everybody is talking about a bubble, guess what? We probably are not going to be going down. Now, if we come over and look at the volatility index this week, notice on Friday, we were able to go up just a wee little bit. The VIX was up 2 cents on the session. However, if we come over real quick, we look at the Dow Jones chart on the top, then we look at the transportation index. This week, what do we have? We had the Dow Jones once again making a new all-time high. Then we look down here at the transportation index. We cannot even get back above the previous swing point. Again, another sign of weakness. You might say, Mike, weakness? What are you talking about? We're making new all-time highs. It's only a matter of time before we get some type of correction in this market. Now, something we do want to pay attention to is we need to pay attention to the 10-year versus the 2-year yield. We want to look for the spread. When this starts to steepen, and we can look from left to right, this has already been on the move up. But if it starts to steepen like we saw over here back in April, that's when it's going to be a real problem in the market. However, here's something that could get lawmakers to hurry up and rush and make a deal. If we see this really starting to ratchet up like we saw back in April, they might have to have an emergency session, might have to come back in and try to get this government kick-started and going. Now, if we come over and look at the SPY real quick versus HYG, this to me is very, very telling. Notice right up here on the SPY, as we were able to come up, make it another new all-time high. Now, notice what we had down here in HYG. HYG ended up making a lower high, so now we have divergence between the S&P and HYG. And notice, as we came down, as HYG came down later in the week, it was also able to take out a swing point. So is this a sign that maybe, just maybe, we're about to get a deeper correction in the stock market? Well, as we come over and look at the QQQs out here on the weekly chart, notice we have a little bit of a wick on top of this candle, a little bit of a wick on the bottom, but when we look down here at the MACD indicator, right now showing no signs of weakness. But if we go ahead and we throw on the 9 count, look at what we have out here this week. We got a 9 count out here on the weekly time frame. Now, if you're wondering what is the 9 count, I'll link you to a video right up there in the top right-hand corner of your screen. But the short answer is this is a sign of exhaustion in the market. However, another argument could be, Mike, don't worry about it. Yes, maybe we'll pull back just a bit, but maybe this is just rotation in the market. Keep in mind, healthcare this week was extremely strong. Well, if we come over and look at a chart of healthcare real quick, look on the weekly chart, notice this is one heck of a bullish candle. However, we're only on the 1 count on the weekly time frame. Then we come down and look at the MACD indicator. The MACD indicator looks extremely strong at this moment. We came right up near the high volume area. We need to watch it. If we can clear this high volume area, it could lead to higher prices out here. On the daily chart, we now have 1, 2, 3, 4, 5, 6 consecutive candles that have closed higher than where the candle actually opened. MACD indicator still looks extremely strong at this moment. Then as we look at this on a monthly chart as well, we can make the case that we have this trend line right here that we have now broken out from. So is all the money going to now lead technology and start flowing into healthcare, causing the stock market to not get that pullback that some of us have been seeking out? Well, if we come over and look at the SPY real quick on the monthly time frame, notice what we have. As we've come up, making new all-time highs, MACD indicator is roughly at the same area it was before. Then if we do a simple candle count, we have 1, 2, 3, 4, 5 closed months where the market has not only closed higher than where it opened, but also closed higher than the prior month. Now, once we start getting consecutive 5 or more candles in a direction, we got to be suspect that a pullback could be imminent at any moment. Then as we come over and look at the weekly chart real quick, notice on the weekly chart, small little wick on top, small little wick on the bottom of that candle. MACD indicator still looks strong at this moment. However, when we come back over and we put up that 9 count, notice we also have a 9 count out here on the S&P 500 on the weekly time frame. Now, before we come over and take a look at the daily chart real quick, I want to remind you guys right now, Take Profit Traders having a 40% sale off all their valuation accounts, 0 activation fee. Take advantage of this offer. Use code Epitome at checkout. So now as we come over and look at the SPY out here on the daily chart, notice on Friday, we have quite the wick on top of this candle. And what I really like about this is on Thursday, we had a potential hanging man candle. We still have not confirmed that yet. However, near highs and lows in the market, quite often we'll see this pattern setting up where either we get the shooting star type of candle and then a hanging man, or vice versa. In a downtrend, we'd have that inverted hammer and then a hammer candle, but still kind of the same type of pattern out there. If we look down here at the MACD indicator, is the MACD indicator higher as price was pushing up? The simple answer is no. However, that does not mean stocks are just gonna all of a sudden fall off a cliff. When bad things happen, we've already been going down for some period in time. But one of the areas I'm really watching on this chart is this minus development area from 556.36 down here to about 649.20. If we get through that, then I'm going to gravitate towards this high volume area at 644.06. Now, before we can even worry about some of those other deeper retracements, let's pull a Fibonacci retracement right down here from the swing low, right up here towards the new all-time high in this market. Now, a minor retracement would be right down here at the 38% retracement at 665.66. However, quite often the S&P is going to retrace to the 50 or even 61.8 fib level. And if we turn at any one of these three Fibonacci levels, this could actually set up an ABC pattern where the market starts to go up. However, if we break the 786, then I would expect the market to come down, take out this swing low, and potentially go lower from there. And if we look at this just from a basic structure standpoint, here is the FOMC candle. We came down, we tried to test it. Boom, we rock it up. We come down there again. Maybe we get a smaller bounce up, but I think ultimately that level will give way and we'll see stocks cratering substantially lower from that point on. On the 4-hour chart, we can see that shooting star type of candle, and then we get confirmation of it. We filled that little bit of a gap. We clearly see the MACD divergence also playing out. But on the 4-hour chart, we have this high volume node right up here, right around 663.14, which would make sense for a pullback in the market. And again, if we pull our fib on this chart real quick, notice that aligns very closely towards that 50% Fibonacci retracement level that we talked about on the daily chart. Now, when we come over and start looking at the 30-minute chart, notice the MACD indicator does have a bearish cross of the two lines. Now, we were able to close within value, but let's say on Monday, we are trading below value area low. Well, if that is going to be the case, I would then want to start looking for lower prices. And some of those lower prices would have to come off either the daily chart or off that 4-hour time frame chart. Now, as we come over and look at the S&P futures markets real quick, we look at the weekly volume profiles with 4-hour candles. Now, notice we have value area high right up here, 6784.75. We have the point of control at 67.65 which we just barely closed below that price point. Then we have value low down here at 6712.75. Now, some of the areas I'm watching is any of these high volume nodes that we see could act as magnets in this market. And one of the things I would really love to see is if we can get back below the previous all-time high at about 6756.75, right over in this area. If we break down below that level, then we can start looking to pick off some of these other high volume nodes as the market tries to make its way down towards value area low, towards this high volume node, and maybe even potentially lower from that point on, like right down here at 66.74. Keep in mind, it's been quite some time since we've had even a 5% pullback in this market. Now, if we just go ahead and map this out real quick, let's just look at how far a retracement a 5% pullback would be. That would bring us all the way down below this other point of control at 65.58, and a 5% pullback would bring us all the way down towards this high volume area at about 64.60. Now, I know the market people will be flipping out, we're down 5%. Keep in mind, that would be a normal retracement. The uptrend could still be intact, even with that type of pullback in the market. Now, as we come over and we start looking at the daily profiles on the 30-minute chart, notice we closed near the lower end of the range. We were able to take out the Asia session low. Now, as I'm looking at this, what are we expecting? Well, we're sitting right near value area low, 67.62.5. If we break below that level, I then want to turn my attentions right back down towards the low that we saw on Friday. But in the event we break value area low and we start coming up, we can use this level as a line in the sand. We get back above it, I would then want to be on the buy side of the trade. I'd want to target the point of control. Then we can target this next high volume area, 67.78, then value area high, 67.87.5, then hold our nose, all-time highs. How high could this market potentially go? Well, speaking of that, let's go back over here and play devil's advocate real quick, because we could have a potential larger A to B equals C to D pattern on the way up. This entire leg could be the A to B leg. This little retracement down here could be the B to C leg, and that would give us a price completion all the way up here at 6951.86. And if we look at that price point, that really is not that far away from what some of the big banks have been calling for the S&P 500, hitting 7,000 before the end of the year. Now, even the stat that I'm going to share with you guys here in a few moments, even if that stat does indeed fall in line within the 70% probability like it normally occurs, we could still see the market getting up here by the end of the year. Now, before we come over and look at the NASDAQ real quick, notice the dollar index. Dollar index been on the move a little bit lower. Small little update on Thursday, then on Friday, right back down. However, we come over and look at the precious metal gold. Once again, this week, making new all-time highs. Now, the MACD indicator does look a little bit tired up and around this area. However, right now, gold simply is not pulling back. And it's not just gold. If we come over and look at silver futures real quick, silver futures on Friday was busting out of this range right up in here. However, that was not enough to put silver at all-time highs. But as we look at this, we can clearly see we've had the momentum push up here to the upside. Then as we come over and look at 10-year yield, this is something we most certainly want to keep an eye on. Now, I warned you guys about this last week. All right, are we going to come up towards resistance and run down? If we bust through this resistance level on the 10-year yield and it starts ripping up higher, that is going to be problematic for the market. That will probably usher in a multiple day pullback in the market. And we'll see, do we go down 5%, 8%, 10%, or potentially even more? Now, when we come over and look at the QQQs real quick, we already talked about the 9 count on the weekly time frame. However, when we come over and look at Friday, we came down, we filled the gap that was left behind. Now, keep in mind, we did have a hanging man-ish candle from Thursday, and now with Friday's price action, we basically confirmed that hanging man candle. We look down here at the MACD indicator. We can clearly see we have MACD divergence, where the second peak in the MACD indicator, as we came up and make a new all-time high in the market, the MACD indicator simply did not make a new high. That is a warning sign we most certainly want to pay attention to. Now, if we were to pull a Fibonacci retracement of the leg right down here from the beginning of September, right up here to all-time highs, look at the 38% retracement. This would be deemed a minor retracement. That would come in about 589.18. However, between the 50 and 61.8 level would bring us right in between this high volume node at about 580.04. Now, when we look at this on the 4-hour chart, we can clearly see the divergence playing out on the 4-hour chart as well. We also had a hanging man candle. So will we be able to bust through this high volume area? Watch the price point, 598.29. If we can break that to the downside, I think that's going to open up the door to much lower prices out here. On the 30-minute chart, the MACD indicator at this moment looks extremely weak, showing no signs of letting up. Now, notice we did close right around the point of control. However, if we break value area low, I want to look for lower prices. If on Monday we're staying above value area low, I want to be looking on the buy side unless one thing occurs. And that would be we come all the way up here above value area high, and then we turn and come back down. In that event, I would also want to be looking for sell side trades in this market. Now, before we come over and look at the futures markets real quick, let's take a look at this stat real quick. This stat's brought to us from Wayne over on X. But I want to pay attention. There's 3 different segments, and it's basically to show us how October performs. And this could be a 70% stat. Notice if the third quarter we were down 1.8%, then October we've been up 13 times, down 4. However, when the third quarter has been anywhere from negative 1.8 to a positive 4.6, we've been up 12 times, down 5. However, look at the current condition that we're in. The third quarter, we had a 7.79% gain. And when that occurred, and what this shows for October, if we follow this stat, we've only been up 5 times, down 12. So if you got out your calculator, you can figure this out, and it would come out right around a 70% chance that we will be down. Now, notice when this has occurred, look, 1987, this stat came true where we were up 5.87% in the third quarter. And then look what happened out here in October, down 21%. 2018 occurred, 2020 and 2024. Is it going to also happen once again in 2025? Let me know your thoughts in the comment section down below. Now, when we come over and look at the NASDAQ futures real quick, the weekly volume profiles. Now, on Friday, I was looking like we were going to close above value area high, but then once I got off stream, boom, right on down. 25,029 3/4 is value area high. If we stay below that price point, I want to target right back down towards the lows on Friday. Then I want to turn my attention towards the next high volume node, 24,886, then down towards the point of control, 24,828.75. Now, as I zoom this chart out, do you guys see any volume profile pattern? If you guys follow the channel, you probably already picked up on it. Now, here's going to be a clue. Pay attention to the point of control, 24,828.75. Do you guys see the pattern yet? Maybe not. If you're new, don't worry about it. But look at the prior week. We are now going to have 2 consecutive point of controls on the weekly time frame. 2 or more by default. I will be looking to target this area this week, 24,828. Now, last week, we barely missed hitting the prior week's point of control, but the fact of the matter was we barely missed it and we still missed it. We were unable to test it, which increases the probabilities that this week we will be coming down to take out that point of control. Now, value area low will come in at 24,733.75. So if we do get below that point of control, I want to target value area low. Then below that, I would want to try to target this point of control down here at 24,622. Keep in mind, if things do get ugly out here, we have another point of control all the way down here at 24,073. Now, I am kind of curious. If I were to grab and measure this out, we can see that would be a drop of 1,123 points. Now, anybody that's been trading the markets for any amount of time, we've seen that happen in a day. This will only be a 4.46% pullback in the market. That's still a minor retracement in this massive bullish move we've had out here. And just to put this in perspective, if we measure from the April lows right up here to all-time highs, the NASDAQ has went up 48%. So from April, we are up 48%. So to think we can get a little bit of a pullback is not that far of a stretch of the imagination. Now we come over and look at the daily profiles on the 30-minute chart. Notice we are closing below value area low. Value area low comes in at 25,014.75. So anytime we close outside of value, I expect the next 1 to 2 sessions, we will come back and at least test that price point. Now, if we do get above it, I would not want to use this point of control as target number 1 if you're looking to play the volume profile rotation trade on the way up. Instead, I would prefer to use one of these 2 high volume nodes as potential targets, 25,032 or maybe up here towards 25,074. Above that, then I'd want to target that point of control, 25,120.75. Then value area high, 25,162.25. We breach above that, we're going to be making a run to new all-time highs in this market. Now, keep in mind, we still have another untested point of control all the way down here at 24,603.25. Now, in the event that we just simply gap down come Sunday night, I'm not saying that is going to occur, but if that does occur, we'll see if we go down and maybe we get a turnaround Tuesday before we come back and test that level. But be mindful, if it's a large gap, large gaps typically do not get filled on the same day. Now, if you're still wondering, is Take Profit Trader the #1 prop firm out there? Then you want to make sure to check out this next video right here.